right, everyone. This is Vishal from Equity Guru, and welcome to a new series where I'm going to make you guys trading expert. That's my goal, at least. And what we're going to do in this technical trading 101 series is we're going to build a base or foundation, and these videos are going to build upon each other. And by the end of it, I'm going to hopefully impart some of my skills to you guys. We're going to look at everything technical, trend lines, support and resistance, candlesticks, and then we're going to look at more complicated patterns down the road. But let's start with the basics, and then we're going to put this stuff together later on in future videos. And we're going to start off with basic candlesticks. So you've probably heard of candlestick charts. Basically what you see in front of you right here in this green and red. I just want to basically go over how to read a single candlestick charts, and I think this can improve your trading right from the get-go. But before we begin, quick history. This is something that was developed in Japan by a rice farmer, and it was really brought to the West by this guy here named Steve Neeson. And this is sort of the Bible of, I guess you can say, technical analysis or candlestick charting for sure. And this book is Japanese Candlestick Charting Techniques by Steve Neeson. Came out in 2001. The ultimate guide to a critical tool for mastering the financial markets. And this really brought this method to the West and has been quite popular ever since. So if you're interested in this and want to be, a student of technical trading and candlesticks, this is the book that I would recommend. But let's now go over candlesticks. So very briefly and very basically, you have two types of candlesticks. You have one with the green body, one with the red body. All that matters is that in a green candlestick, the close or the closing price is higher than the opening price. For a red candlestick, the close is actually lower than the opening candle price. So you get two basically skeletons here. You have the body of a candle, which is the green or the red. And then do you see these little sticks sticking up? Well, those are called wicks. So think of it as a candle wick, where you light the flame. Other people call it a shadow. So the term shadow or wick can be used interchangeably. I like the term wick because, it fits the whole candlestick image there. So you have your wicks, you have your bodies, and on both candles, the wicks represent the very low of the price and the very high of the price. And again, the only thing that differentiates between a green candle and a red candle is in a green candle, the close is higher than the open, which means price is going up, whereas in a red candle, the close of the price is lower than the open. So if we're going to read this very basically, let's start with the green candlestick here. Price opens at this level, it dips below, hits this low, the buyers jump in, taking the price to these highs before we see a bit of a sell-off, and that's how we get our close. Alternatively, in a red candle, we get a price that opens high here. It starts to shoot up higher, getting the bulls excited. However, sellers then pull in the pressure, taking us down to the lows, and then we get our close here, which is again lower than the opening price. So that's it. That's basically how you read a candlestick. And if we take it to the S&P 500 daily chart, we can start to read some of these candles. Obviously, with the big green candles, you have your opening price higher than you have your closing price higher than the opening price. And notice some of them, they have very minimal wicks there, right? So it means that the open and the close were very close to the lows and the highs. And then, if we read candles like this, we have I won't get too technical. We're gonna save that for future videos, but this is something called a doji or a spinning top. But again, don't worry about it. The goal right now is just reading candlesticks. So you have your open here, price hits these lows here, we then get a move higher to hit the highs, and then we get a closing price here higher than the open to get a green candlestick. Alternatively, for a red candlestick, we get an opening price here. Price is moving higher, and then we get price or seller stepping in, taking us to the lows here before pulling up to get a close, which is lower than the opening price, hence a red candle. So what I recommend now is just do what I just did here. Just open any chart, doesn't really matter what it is. Do what I did, where you have, your opening price for a red candle, price hits the highs, you go down to the lows, buyers step in, taking us up to close, which is lower than the opening price. And just by that one sort of analysis, just being able to look at candlesticks the way I just did, or as the way outlined here with opens and closes, you can actually start to see and build this market sentiment and get this feel for market sentiment, but more importantly, market psychology, because that's really what you see in candlesticks. So a lot of people say you see psychology of traders and the markets and human emotions, better outlined here by just looking at where the wicks are and how these bodies close to confirm, either a breakout or a breakdown. But I think just being able to read candlesticks like this, you get the sense of this battle between the bulls and the bears and who is winning that battle. And again, just the skeleton right now, we're just building the base, because as you can see, you get tons of candlestick patterns, hammers, dojis, haramis, hanging mans, bullish engulfings, sandwich, three white soldiers, morning star. But again, don't worry about that, because we're going to build to this level down the road, because what matters is that these patterns for candlesticks, they can't just happen at random points, right? You don't just see these patterns at a random point and say, okay, now this pattern has triggered. It gets a bit more complicated than that. So for now, just focus on being able to read a simple candlestick here. Again, the key is a green candle, the close is higher than the open, and in a red candle, the close is lower than the open. Using this will improve your trading. Believe me, this is just the start, but we're going to put all this together in future videos to make you a technical trader master. So I look forward to seeing you all in the next video, and have fun playing and analyzing single candlesticks.